Welcome to Tuesday's Market Outlook here at Top Gun Options. Matthew Buckley, the founder and CEO here at TGO. And futures are indicating higher this morning. Why? Because they indicate higher this morning. Even with all the global uncertainty around what Putin's going to do based on the new round of sanctions that we've blasted across his bow, I guarantee you, folks, he's not sitting in a room somewhere going, oh, okay, let's just everybody throttle back and calm down here. I also don't think he's surrounded in a room full of guys saying, hey, you know what, sir, I think enough's enough. Let's just take a break here. I think he's surrounded in a room full of guys sitting there nodding their heads going, that's brilliant, sir. Whatever you think we should do next is what we're going to do next. So it's all quiet on the Western Front, so to speak, but I think we're about to get a shotgun blast back from Putin because he's not going to take these sanctions sitting down. But our futures just kind of melt higher a little bit on earnings. Coach was actually a miss this morning, but you know, I'm not too into Coach here. Buffalo Wild Wings was a big beat after the hours yesterday, showing how that level of restaurant is actually looking pretty strong. Strong sales store growth and lower prices on their end. Compare that with a Chipotle, which had good numbers and then said they were going to raise prices. Pre-market, Apple filing for a huge multi-billion-dollar debt offering. Why? Why are they doing this? Well, guess what? Because most of their cash is overseas. Why? Corporate taxes, okay? So they need money domestically to do all their share buybacks because they can't do it with the money they have overseas. Great tax rate, United States, well done. Actually, it's pretty stupid. Also, folks, I thought this was a pretty interesting read here. Goldman Sachs strongly suggests clients sell them their treasury bonds. They are looking at a positive outlook, stronger macroeconomic data ahead, accommodative overall financial conditions, and less segmentation in the euro area. Bottom line, it's pretty funny because 3 months ago, Goldman Sachs sent out a big paper on how there's a 65% probability of a 10% correction this year. And then here they go telling everybody to sell their treasuries and get in the stocks, essentially. So pretty funny that the giant vampire squid tells you one thing and then they're probably doing the other thing. I thought this was, the last time Goldman Sachs urged clients to sell, what was it? Remember this last year? It was gold. After Deutsche Bank, fired their shot with sell gold, then came Goldman Sachs, and in the next quarter, they were the largest acquirer of the precious metal via ETFs, such as the GLD. So take what you hear from Goldman Sachs with a grain of salt, because most likely they're saying something on one hand and doing the exact opposite on the other. So typical Goldman Sachs. Good stuff going on in the market, even though not necessarily should be. It's been a lukewarm earnings season. There's been a lot of beats, but again, beats haven't been that strong of beats. Very busy week ahead, as we've talked about. We have a two-day Fed meeting that is starting today, and we are going to get their statement tomorrow afternoon. We know that's going to be potentially market moving, but we also know that the jobs number on Friday is really going to be a mover of the market as well. So for now, we melt up until we're proven otherwise and given reason to head down. Okay. S&P Case-Shiller comes out at 9 in a little bit here, and the Conference Board's consumer confidence numbers at 10. So those will both be big market moving data that I'm going to be looking at in our primary live trade brief this morning at 0900. So I got to run. Happy hunting. Make sure you hedge and make sure you stop back tomorrow for Wednesday's market SITREP. Also, make sure you're sharing the SITREPs, folks. Share them on Facebook, tweet them out there, or Google or LinkedIn, and spread the word about TGO. So I'll talk to you guys tomorrow. We'll see you.